Today, after all, looks like it's going to be a lot of what we just saw last week, even with the holiday where we usually see things kind of correct themselves ever so slightly. Today, we absolutely see no movement whatsoever. Looks like the 10-year Treasury is hanging right in there. Mortgage-backed securities down a little bit, but it looks like the pricing from all these lenders is hanging in there. And with no significant data until Thursday of this week, when we're going to get initial jobless claims. I mean, on Wednesday, we get housing starts, things like that. I do not think that has a potential to move the market in any significant way. On Friday, we do have PCE, and that is the Fed's favorite indicator of inflation. But if we look at all the data that has been coming down the pike here, it looks like inflation is pulling back. I expect the same indication for PCE, so I do not expect any surprises there. However, what do I think could move the market this week? Well, I think that initial jobless claims, if it comes in way under, could obviously, but I really think it's going to be the markets themselves. It looks like traders are kind of just willing to sit on the sidelines at the moment. And as I've said before, traders are in business to make money, so they got to put it somewhere. I think if we get a day where we see a rally in the market, you are going to see a slight correction in interest rates. And once again, it doesn't necessarily mean that your rate goes up. It means that yield spread premium is going to change, and that's really what you need to be tuned into. And if you don't know what that is, you need to give me a call. So who am I? My name is Kevin Weedmerg, aka The Mortgage Mouth. Every day I come to you with an episode of The Daily Dose. So make sure that you hit that subscription button so you never miss a beat. So right now, I don't see any reason to not float unless you are in love with the rate. If the rate is right, and the costs are right, then I would certainly be locking in. As I said last week, I do not expect us to just be all of a sudden this downward trend. I don't see doom and gloom in the labor market yet. I think we got a little bit of sell-off in the Dow and everything like that because the potential for a struggling labor market, but without it falling off a cliff, so to speak, we're going to be riding these interest rates where they are right now. So again, I think we're at a little bit of a valley here on that little roller coaster we've been riding. All right, y'all, have a wonderful evening. Thanks for tuning in. Really appreciate it. Once again, hit that subscription button. Love to have you as a member of the team. And I will talk to you soon. If you need anything, don't hesitate to reach out to me personally. Thank you very much. Have a great evening. Cheers.